So you've probably seen the headlines blowing up your feed. Tips are now tax-free. It sounds incredible, right? A massive boost to your take-home pay finally. But before you go and book that dream vacation, I have to break it to you. For most people, that's not going to be the whole story. In fact, it's dangerously misleading. We need to break down what this new 2025 tax law actually means for your wallet. We'll get into who really qualifies for this thing, how much you can actually save, and the huge catch that almost nobody is talking about. This is the stuff you absolutely need to know to protect yourself and your money. Okay, so where is all this buzz coming from? It's all because of a new piece of legislation called the One Big Beautiful Bill Act, and you've heard plenty about it. And it was signed into law on July 4th of 2025. But tucked inside this massive bill is a part everyone's calling the No Tax on Tips Act. And on the surface, it sounds like a dream come true for the millions of us who rely on tips. But here's the single most important thing you need to understand. This law does not make your tips completely tax-free. Let me say that again. Your tips are not tax-free. What the law actually creates is a new federal tax deduction for what is called qualified tips. What's the difference? It's a huge one. Saying something is tax-free makes it sound like that money just disappears from the IRS radar. But that's not what's happening here. A tax deduction just lowers the amount of income that gets taxed. Think of it this way. If you earn $50,000, a $10,000 deduction means the IRS only hits you with income tax on $40,000, not the full $50,000. So it definitely lowers your bill, but it doesn't make it vanish, and that'll become clear here in a minute. Specifically, this new law creates an above-the-line deduction, and that's good. Don't let the jargon throw you. All that means is you can take the deduction even if you don't itemize and just use the standard deduction, which is what most people are doing. And this is awesome because it opens up the benefit to way more people. The law lets eligible workers deduct up to $25,000 a year in qualified tips from their federal income, and that's a substantial number that will lead to real savings. But it's not a free pass on taxes. Now, for the million-dollar question, do you get this new deduction? This isn't a free-for-all. The law is super specific about who gets this golden ticket, and you've got to clear three main hurdles. First and most important is your job. The deduction is only for people working in a job that customarily and regularly, and that's important language, receives tips. So who decides what that means? Well, the IRS. The law gives them until October 2nd of this year to publish an official list of jobs that qualify. Now, that list isn't out, but we expect it to be restaurant servers, bartenders, hairstylists, nail techs, rideshare, etc. But if your job doesn't make that final official list, you're out of luck, even if you get a tip once in a while. You know who's not going to get this? Accountants. The second hurdle is your income. This tax break is meant for working class and middle class folks, not a high income earner. The law has a phase out rule, and that $25,000 deduction starts shrinking once your modified adjusted gross income creeps over $150K if you're single or $300 if you're married, and file a joint return, which you're going to have to do. For every $1,000 over that, you're going to lose $100 of deduction. If you're a tip worker who also happens to be a high earner, that means you're going to be out of luck on this. The third hurdle, fine print, all the little rules designed to trip you up. To claim this, you have to have a valid social security number. If you're married, like I said a minute ago, you're going to have to file a joint tax return with your spouse, which could complicate the rules and take you out of the AGI limits. If you're a specified service trade, accountant, lawyer, things like that, you're not going to get it. The bottom line is you just can't assume you're in. You have to check every single box, and we're going to have to wait for that IRS list in October. Now, the internet is already a mess of bad info on this law, so let's just kill the four biggest myths right now. Myth number one, awesome, all my tips are now tax-free. Nope, not even close. Like we covered, it's a deduction, not a magic wand that makes the taxes disappear, and that deduction is capped at $25,000 a year. So if you make $40,000 in tips, that's great, and you can deduct the first $25K, but that other $15,000 is still fully taxable federal income. And also the law is specific about qualified tips, which are voluntary cash or charge tips. So if somebody gives you a free pair of concert tickets as a tip, that's not a cash tip, and sorry, it won't qualify. Myth two, this is life-changing. I don't have to pay any taxes at all on my tips. This is a very, very dangerous myth out there, and it's a big catch I warned you about. The new deduction applies only to your federal income tax. It does absolutely nothing for your payroll taxes. Think your Social Security and Medicare, those FICA taxes. Those are still due on every single dollar of your tips. So quick math is if you made $30,000 in tips with the new law, you can deduct 25 grand, and that's great. You only pay federal income tax on 5,000, but you're still going to owe the full 7.65% on the entire 30, and that's $2,200 of taxes that has to come from you. And you could get a real rude awakening on your tax return if you aren't prepared for that. Now, myth number 3 is since it's a federal rule, I don't have to pay state taxes on my tips. And that could be a massive mistake depending on where you live. Where we are, Missouri, Kansas, the federal and state usually are the same. But we can't guarantee that that's going to be the case in every state, and I can't guarantee it in Missouri and Kansas yet because they haven't had a chance to say whether they're going to do it. I assume they probably will. But you're going to have to pay attention at the state level to see what they're going to do. You're going to need to pay attention to probably your accountant. Maybe watch their website. There's going to be information out there, but don't assume it's going to be tax-free or this one could really bite you. Myth number 4, my tips are tax-free so I don't have to report them anymore. Wow, this one's a big one, and it's 100% wrong. It could land you in some serious hot water. It's actually the exact opposite. Reporting your tips is now more critical than ever, and the law is crystal clear. To get the deduction, the tips must be reported correctly. That means you still have to report all cash tips over $20 a month to your employer and make sure every electronic tip is tracked. In fact, the law adds new, tougher reporting rules for the employers, and so we think they're going to have to report it as an extra item on your W-2. We don't know exactly what that's going to look like yet. We're going to have to wait and see. But that's going to happen in order for you to get the deduction, and I don't see any way around that. Now, if this breakdown is clearing things up for you, help me out and hit that like button. It really helps the channel out, and if you've got questions about your own situation, drop them in the comments below, and I'll try my best, I promise, to get through them. Subscribing means you won't miss out on big financial changes like this one, as well as when the rules come out later on this year from the IRS. So go ahead and hit that button. Okay, so we've busted some myths and we laid out the rules. So what should you actually be doing? Here's your 5-step action plan, and I want you to follow this. Number 1, you're gonna have to keep insanely good records. Seriously, you've got to do this. You need to track every single tip, whether it's a cash on the table, an amount from a credit card slip, use a notebook, an app, I don't care. Just have a daily record because this is gonna be your evidence when it's time to claim that deduction. Number 2 is talk to your employer. This is a big change for them too. Set up a discussion with your manager, owner, HR, whoever, and ask them how they're getting ready for the new reporting rules. You should also bring up your Form W-4 potentially. Maybe you can lower your withholding because you know you're not going to have to pay tax on that extra $25,000, and you could have more money now instead of a refund later. And for a lot of you, that could actually help the budget quite a bit. Number 3, we already talked about this, but check your state rules like we talked about. Just because the federal does it doesn't mean your state will. So check with your CPA, your accountant, check with their website. It's usually going to end up in a .gov. Don't go to some of these garbage sites. Go to the right sites, but probably the best place is going to be your accountant. Step number 4, don't forget to budget for these payroll taxes. We don't want to get blindsided by that 7.65% for Social Security and Medicare. We still have to pay that on the tip income, and that could be a big surprise if you forget about it. So don't forget to budget it, set it aside in a bank account, wherever you save money, but put it there. Maybe even consider doing quarterly estimates if it's enough. We don't want to get tripped up by this, so I want to make sure you're aware. And number 5, this is temporary, and this is a big deal. Don't get used to this. No tax on tips is currently set to expire after 28, so we get 25, 26, 27, 28, and that's it. After that, the law is gone, and Congress could extend it, but there's no guarantee. So enjoy the savings while you can, but keep your eye on the news as we get closer to that expiration date. Keep an eye on videos like this one to make sure, because I'll keep you up to date. So back to the big question, are tips really tax-free? I hope by this point you know that's a hard no. What we actually have is a new powerful and valuable federal income tax deduction of up to 25 grand for certain workers in certain jobs. And that's a game changer and can put thousands of dollars back into the pockets of those who really need it. But it's not tax-free for all. You still owe payroll taxes on every tip dollar, and your state might still tax your tips. And of course, we only get this break if we have a qualifying job, and we'll find out more what all those are over the next few months. And you have to report all your income. So while the headlines got a little carried away, this is still a huge positive change for millions of workers. And the key is to understand the real rules and ignore the myths, and now you do. So thanks for watching. Subscribe for more financial breakdowns without the nonsense, and I'll see you in the next one.